Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Wednesday, April 13th, 6:41 a.m. as I'm starting the video. And as always, please run your play at 1.5x. Taking a quick look at futures, Bitcoin up 1.4%. Oil is up again 1.6% after a monster day yesterday. I think it was up 6 or 7%. Nat gas, epic run, up 1.75%. Equities hanging in there green, nothing dramatic, up about 0.3 to 0.5%. On the macro front today, we've got mortgage applications that'll have a ripple through effect depending on what the number is on housing. With rates over 5%. We've got a final PPI number. Also, the Atlanta Fed is out with its inflation expectations. That will be closely watched as well after coming on the heels of that 8.5 CPI print yesterday. And we've got oil inventories at 10:30. Last night, the API was out with its pre-read on oil inventories, and there was a build in their numbers for oil, but that was including like 3.9 million in SPR releases, big drawdowns in gasoline and distillates. So overall, it was taken as bullish after the bell last night. And of course, we've got the kickoff to the earnings season starting today in earnest with Delta Airlines, JP Morgan, BlackRock, and several other banks. Tomorrow we'll have the onslaught will begin with a bunch of big banks. We got what do we got? Wells Fargo, Citibank, plus a bunch of the larger regional banking players. And then don't forget that tomorrow is the end of the week. The April options expiration is tomorrow, not Friday. Markets are closed Friday for the Good Friday holiday. So if you've got stuff expiring tomorrow, be aware of it. You may want to do something with that today, especially if you're going to start your weekend early or just want to kind of get positioned for the following week. Just don't get caught unaware, tomorrow afternoon at 3:30 and figure out that you got a bunch of stuff that you need to take action on so you don't get any rude surprises. So let's start out with the oscillators. They were actually up yesterday. So really the posture of these oscillators and NAMO, the Nasdaq Oscillator, looks exactly the same as the New York Oscillator, coming out of overbought. Now we're down in the lower third of the range. So I think we've still got more downside to go in terms of this move till the probability of a bounce increases. Now, could it bounce right here? Sure, it could go up. But normally what you see, if you just look back in time, we've got to get a lot lower before, that the odds of a reversal really start to increase as you move down towards minus 50, minus 60, minus 70. Then you can almost set your watch by when you're going to get a kickback rally. Really interesting day yesterday. If you were watching or aware, we got the CPI print at 8.5. There was more or less a relief rally out of the gate. I was talking about, what if this thing is 9? What if it's 10? When that didn't happen and the 8.5 print more or less came in line, there was a relief rally, like, oh my God, we dodged a bullet there. Let's buy everything. And then they ran it up in this case, on the SPY, they ran it up to the 50 and the bottom of this open gap, and then they faded it the rest of the day, right back down to the 200. So again, I mean, that should, as far as sentiment goes and price action, yesterday was a very bearish day, even though, you know, the big averages weren't down tremendously. You know, to see that rally just 100% faded, taking it from boldly green to red, you know, down, you know, 0.37% is nothing. But considering that it was up 1.5%, it really speaks to it. So on SPY, I think the analysis is about as simple as it gets. Bulls stay alive by a thread as long as the 200 holds, and that's where it's sitting. I've got the 200 at 437.51. You get a break of the 200, then more selling comes into the picture. 2 hour here, you can see that rally right into gap resistance and the 50 EMA, and then they rolled it over here. We do have a line of support here on the 2 hour chart. Comes in around 433, 433.50. But then after that, if we were to go lower from there, you've got a void in the chart here, void in the volume over price bars, and then you've got a layer of support coming in at 426, quite a bit lower than we're at right now at 438. But first things first, as long as the 200 holds, you know, everything can be held together. Maybe they hold it together through options expiration. So everybody that has these disaster put strikes down here don't get paid. Let them all expire, and then next week take it down. And that reminds me, talking about this 3-day weekend, be thinking about how you want to be positioned as far as, you know, what you want to carry over the weekend, whether, you know, all long-term stuff, you don't need to worry about it, or you've got shorter-term positions that you might want to clean up or whatever heading into the weekend, so you're not biting your fingernails through Easter and, you know, watching everything, you know, Sunday night when you should be relaxing and stuff like that. So anyways, take a look at that. Don't forget about the weekend. Zoom in on the SPY 30-minute chart. You just see the fade. And, you know, as far as active trading, I mean, yesterday was, you know, if you were on your toes and into it and, you know, watching this move up into the 50 EMA, and the bottom of the gap was a very objective level to try a short with a stop just above, and, you know, once it rolled over, it never looked back. So there weren't any real big shakeout candles or wacky action after that mid-morning rally started to fizzle. So congratulations to you if you caught that. Same kind of action on the Qs. Notice here on the indicators, we've got a bearish cross right here on momentum. Notice that the RSI has dipped back below 50. So we're in the bearish regime here on RSI. Bearish cross here. You can see the histogram bars moving lower here. And we've got price sitting on this really, really key level here at 339. We've got this big value area carved out, But once you lose 339, you move into a big void, and there's just not a lot of structural support down in here to prevent a retest of these prior lows. So that's $20 from here. And so, can it be saved? Yes. Do I think it'll be saved? No. There's going to be, we may get oversold in here because of the oscillators that we just talked about, get a kickback rally. But I think the setup, given the rising rate environment, the inflation environment, it's a bad setup for tech stocks in particular, with the high valuations, etc., lack of profitability. So, and also on the charts, taking all the conversation aside, just technically speaking, you break this, you move into a void, and then I think it can move very quickly. We see that void here as well. We see some larger volume over price bars and some intermediate points where you could get bounces. If you're actively trading, you should be watching those areas, of course. If you're short, watching for signs of a reversal, like down here at 334 and possibly 328. On the upside, if there's a rally, we already know where there's resistance, right? Where it just came from. We had this prior trading range. We've got this large volume over price bar here. And notice that yesterday, this volume over price bar resistance stopped price in the middle of the gap. And that's something you don't often see. But I had it in there just mostly because this was the largest bar on the chart. I thought there might be some resistance there, and it actually stopped right on a dime there. So really, to get something meaningfully going to the upside, you'd want to see price kick back and then take out this prior high. But as it stands now, a series of lower highs and lower lows. So in a fairly pronounced downtrend. Here I've got the downtrend line marked in. That's a place where if you were short, you definitely want to be out of your position on any kind of breakout above this downtrend line. And if you were actively trading, I think your first opportunity to be long is either a move into 337.50 where it finds support and you can look for a bounce back up to 342.5 and the downtrend line, or this morning on a recapture of 342.5, then you might get another run up to the bottom of the trend line, bottom of the gap. But remember, and I think this is a note you should have in your narrative, in your playbook, we're in a sell the rip environment. All bounces are being sold, and so to fight against that, I think, would be a losing battle. And we'll watch price. If things change, we'll know when they change. But have that as a backdrop, and you can see it in the charts now. Rally, sold, rally, sold, rally, sold. So that's been the mode of the market here lately. Moving on to IWM. Bearish setup. Why? got a full bearish stack on the EMAs. We're sitting right on critical support here with these two large volume over price bars right here at 96. If you lose 196, then you move into a void of volume over price support where there hasn't been a lot of trading. And I think below 196, I think we visit the bottom of this prior trading range. And, we've been discussing these levels the whole way. And, just like the other indexes, big rally, came right up. You can see that little wick there, came right up to touch the bottom of the gap, showing that price does have muscle memory. It remembers where these levels are. And if you had taken that opportunity to try a short, there was no need to ever look back after that. So congratulations on a real nice trade. Notice here on the 2-hour chart, there is a little level of support here at 195 where you might get a little reaction, but then after that, it drops off very quickly. And here you see that 196 again, as we were discussing. If you're new to the channel, thank you so much for spending some time this morning with me. If you like technical analysis, if you like having the table set for you every single morning, bright and early, or you can get your game plan together and trust my levels, that takes half of the work off your plate, where you can focus exclusively on your execution around levels that you can trust. And that's where you get paid, execution. There are a lot of guys that can draw lines, but to get paid as a trader, you got to know how to use them. And I do my best to give cogent coaching tips along the way that I think will help you navigate the day and your trading portfolio. If that sounds good to you, please hit the subscribe button and the like button. Hit the notification bell. You'll get notified of all my content. And then please look over in the show notes. You'll see a link to the website, and you can drop your email in and get my content morning, noon, or night. I'm usually sending things out 2 or 3 times a day on market observations and at least one video a day. And if you make a ton of money on one of my ideas, there's also a link in the show notes to buy me a coffee to appreciate the work, support the work, and keep this channel going. So I would really appreciate that. And of course, longtime listeners, I appreciate your support as well. So let's move on to the FATMAAN names. Rally into resistance, into the downtrend line, and fade. I think your next little level of support here on the chart is at 212. Let's take a look at the daily. Still bearish all the way. Gap down, kickback rally to the 50. Now back below all the moving averages. I think if you lose 212 here, I think you can eye this 185. Notice the big void in the charts compared to the big bar right here, where price made its way through, but now back on the other side. So I think the number of buyers that want to step in are going to be fewer and fewer between them. Apple actually up on the day, but here again you saw the rally that was faded. Notice how well price honored that downtrend line. And so today, I think you can, use that downside line as a trigger, or what might even be a better idea is this 168.50. Notice that these levels were resistance on the way up and then support on the way down, and now we're below these big levels of resistance. So for Apple to put in any kind of a meaningful rally, it's going to have to get through 168 for starters. And if it can do that, then your next target is 170, then 172, all the way back up. On the downside, a big line of focus should be down at 163 on Apple. Tesla, I did make a little change in the chart after a couple days of price action. Right here along 980, I dropped in a little support line there. Buyers have been stepping in there for whatever reason at 980. So I think 980 becomes your pivot point for today and going forward. But with resistance at 1,000 now, having price action above that level. So I think this was a bull trap. Then you got $100 trading range between 1,000 and 1,100, and now you're sitting here at 980. I mean, do what you want. I think the right play here is to not get all worried about this $20 between 980 and 1,000. If you're looking for some kind of meaningful move with those really expensive options, I think you got to see a break back above 1,000. Otherwise, what's going to happen is, you get a position just above 980, and then you get stonewalled at 1,000 with all this overhead resistance. So I'd like to see 1,000 taken out before any kind of big move is really even possible. On the downside, it's a different story. If it loses 980, you can see there's probably not going to be anybody home until you get down to at least 940 and probably 900 or even a little bit lower. So I think there's a lot of downside risk there if that level breaks. Zooming out here to Microsoft on the daily, that was an absolute bonanza yesterday. If you caught that trade, we had the bad day on Monday on that news or that analyst report that Office 365 was slowing, and then out of the gate yesterday, big rally up to 290 where it just died, and then pulled back $10. So on the daily chart, notice the bear cross on PPO. Notice that RSI is back below 50 in its bearish regime. And notice here, right at, let's just call it 280. It's a little higher than that, maybe 281, right in there. We'll look at the 60-minute chart in a second. But you can see below this level, it's going to come down here to 272 and test these prior lows along this line, I would imagine. So I would have that 280 alarmed. If you want to, get involved, that would certainly be a level to alarm on the downside. And here was that move, Microsoft's 60-minute chart. Here was that move right into major resistance right here at 290, 291. If you took an objective short right in that area, I mean, I won't say you're rich, but you had a very nice day yesterday, and that's great. Kudos to you if you took that trade. It was easy after you made the entry. Amazon, following this series of bear flag, fail, bear flag, fail, bear flag, fail, bear flag, fail. You kind of get the idea. And when you're in a situation like that, traders do what's been working. So in order for there to be a reason to change, that idea has to fail. The idea that, we're in a downtrend, series of cascading bear flags that keep failing. The only way to change that is for price to come back up here and make a higher high. Needs to take out this level. Your first notion of that will be, if you were to draw a trend line, take out the trend line. That would be your first inkling that something might be changing. But then the confirmation would be a breakout above 3080, and then you might have a low and then a higher high and then possibly a higher low. But as it stands now, it's falling downhill, and your eyes should be on this large volume over price bar here that would bring price down towards 2900. And I'll show you the daily chart just to show you back below all the moving averages. We do have a decent line of support here at the bottom of the box at 2950. Below that, then you're coming back down to fill this gap and potentially test these prior lows. When you look at Google, we're just a few bucks away from being right back at these lows at 25.20. You should definitely have an alarm there in your system. Even if you don't trade it. Why? Because it's a big fat man name, and if Google loses the low, then what does that say about the other mega cap names? So I would imagine that any kind of break of 2020 is going to bring in more sellers. It almost by definition has to. So I would definitely have that level alarmed. Netflix, big downtrend, rally yesterday, out of the gate with the rest of the market, rolled back over. Back here at 345, you can see on the charts, really nothing stopping it once it's below here, coming down to 330 to test that prior low. We've been talking about that. Right back here down to 320. So that would be my expectation, is to move down here. And just like my recent comments on Google, I think it's, unless you're an active trader and watching it all day, you can't take a position here. If you're going to day trade it and look for a move down to 330, that's fine, but not from a swing perspective. You got to wait till you come down here at this pivot point at the prior lows at 330. Then if there is a break below, you can get short with a stop just above, and that will be your swing short after this consolidation. SMH. This one's also on the edge of nothingness. Why? Because we are right back at the prior lows at 240. If you get a break below 240, voids in the chart, not a lot stopping it from coming down to 223, which was an important level, back in the day, almost, was it 10 months ago. We've taken out all that price action, big topping. I mean, it looks like a topping structure, spending a lot of time up here, then rolling over right back at the lows. So I would imagine a break below 240 will send a lot of stuff down. Moving on to some individual names. We talked about Bed Bath & Beyond. I think, we're in this gap here. I'm not sure. Yeah, I think their earnings were yesterday in that move. So I think this is going to go down. Go ahead and fill the gap. I mean, if you're not in it already, might be a hard place to do that. I'd set an alarm down at 16.50. If it breaks that, then right back down to these lows at $13. And remember, all this nonsense started with this stock under 10 bucks. I think if you go back in the charts, you'll see that that's when the reversal happened. So this whole thing may end up being a round trip into single digits. We had talked about CHGG yesterday, down 8%. Don't know if there was news or anything like that, but now you've lost both the 50 and you're back inside this trading range. So I think the way to look at this would be, a big consolidation, back in the range, bull trap. Anybody that bought this breakout here, rode it higher, now knows they're wrong and price is on the wrong side of the 50. I think you can be short against the 50 and look for a move back down to the bottom of the box towards 25. I want to get into precious metals and miners here quickly as we wrap up the video. One thing to keep in mind, and this is something that honestly none of us have ever dealt with, and that is a persistent inflationary environment. You got to go back to the 70s for that. And I think the same can be said of probably 90% of the professional money managers have never operated in an inflationary environment. There's been a 40-year bull market in bonds, which means rates are always falling, but now they're rising and testing those 40-year downtrend lines. And if you go back, one of the epic bull runs in metals was back in the 70s, and you can view it as an inflation hedge. And I think at this point, well, let me make one other comment. Inflation's chugging along 7-8%, right? I think that's going to persist for quite a good little while. If you don't think inflation is going to persist, you can kind of ignore me. But the thing is, I think you got to plan for inflation, and if it doesn't happen, you breathe a sigh of relief, because if you're betting on deflation and you're wrong, that's when you get crushed. If you're betting on inflation and it doesn't happen, you don't really lose much. So if you're in an inflationary environment and your stock portfolio goes up 8%, all you managed to do was stay the same. So remember that you can just subtract 8% off of any of your returns, and that's your real purchasing power. So I think it's going to be really important to have some inflation fighters in your portfolio, and depending on how you view the situation, overweight them. So let's look at gold. Gold broke out of this triangle. A lot of variability, but it's working its way higher. We had a test of the prior highs, and that failed epically. But now we're on the weekly chart. Price is making a move to break out. I think you break out above 183.75, 184. I think we're going to go back to test this high again, and I actually think it's going to break out here on this next try. If you're not an active trader and you're not dialed into gold, I think what you do is you just make a portfolio allocation to gold based on how, whether it's 5% or 3% or 10%. That's all up to you. I think gold's going to be going higher, and I think the more and more inflation persists, I think the gates are going to open, and you're going to see a flood of money come in to these precious metals. Let's look at miners. Downtrend, weekly chart, breakout, making a move higher here above 39. I think your next target on miners is 44. I think we're going to find that level and probably even break out. So I like the gold miners. You can go look at individual names if you care to. Newmont Mining. I mean, there's a slew of them. Barrick Gold. By the way, Barrick Gold has not been the one to be in. I've been in that. It's been very frustrating. Very much underperforming the sector. Now, maybe that'll change, but Newmont has been leading the pack. But you can play the basket with GDX against 39. If you got, any kind of run up and pullback, you can, buy the pullbacks. I think gold miners are going higher. Here's silver. Impulsive move, flag pullback, now a breakout. I like silver long. Next target, 24.25. After that, 25.25, and then really dollar increments all the way up, 26.25, and here is the bull flag measured move. So early in the cycle, just had this little breakout yesterday. PPO resetting at the zero line. We've talked a lot about, when price rolls over before, under the zero line is bearish. Well, this is just the opposite of that. Bull crosses at the zero line and momentum are bullish, and you've got RSI breaking out above 50 as well. Here's Freeport McMoRan, copper miner, working down towards the bottom of the channel. If you got a move into the 50 at the bottom of this channel, I'd definitely be a buyer there. I think this is going higher, and I would really like to see you get some kind of exposure in the uranium sector. This is the uranium ETF that Sprott just took over. I think you're going to see more publicity, more buzz about it, and I think we're at an inflection point in uranium pricing. So I would like to see you have exposure in that space. So just as a recap on inflation, here are the things that are going to outperform or be inflation fighters. Real assets, commodities, oil, grains, copper, base metals, all that stuff are going to grind higher in an inflationary environment. I think precious metals are about to have their moment in the sun. Gold and silver. Oil is going to grind higher in this environment. And real estate. I think home real estate tends to do well in inflationary environments. Also, I think the grocery stores, although they took a body blow yesterday on Albertson's comments, I think grocery and other defensives will do well in that environment. What I don't think will do well is non-profitable bubble Ponzi tech. I think it's going lower. Let's wrap it up there. Hope you got something good out of the video. This has been Chris Buss with Traders Profit Compass. Talk to you next time.